Hey, welcome to The Explainer. We're diving right into the heart of modern financial markets today, and what we're going to talk about is how the whole relationship between human traders and AI, well, it's not just changing, it's being completely rewritten from the ground up.
For the longest time, right, the story in trading has been this epic clash. Human intuition versus the cold, hard power of algorithms. You know, the classic David versus Goliath setup. But what if that whole narrative is just wrong? What if we've been looking at it completely backwards? Today, we're going to see how this supposed battle is actually turning into an incredibly powerful partnership.
Okay, so to really get a handle on this new partnership, we've got to start by respecting the sheer power of the machine. I mean, let's break down what it can really do. You'll see just how different its toolkit is from what any human trader brings to the table.
So first up, let's talk about speed. And I mean speed. A really sharp human trader, maybe they react to some breaking news in a couple of seconds. An AI, it's on a completely different planet. We're talking about executing trades in milliseconds. That's a speed that's, well, it's almost impossible for our brains to even wrap our heads around.
But look, it's not just about being lightning fast. AI brings these other superpowers to the game. It can process millions of data points all at once, something no human could ever do. It works 24/7, never gets tired, never needs a coffee break. And maybe most importantly, it's got zero emotions. That fear, that greed that trips up even the best human traders, gone.
And the sheer scale of information an AI can crunch is just mind-boggling. We're not just talking about stock charts here. AI can sift through financial news, get the vibe from social media, and even analyze totally weird stuff like satellite images of shipping ports, all to find these tiny little signals in the market that a human would never, ever see.
You know, this is exactly the kind of thing that powers super sophisticated tools, like Vantage Point, for example. They use this predictive AI to try and forecast market turning points. The whole idea is to get a heads up, a probability of where the market might be heading days in advance. That's a massive analytical edge for any trader.
Okay, so with all that power, you've got to be wondering, why do we even need human traders anymore, right? Well, because there are these crucial moments where human judgment isn't just helpful, it's absolutely irreplaceable. And here's the real kicker. When things go completely off the rails, I'm talking about a black swan event, something totally unexpected with no historical data to back it up. What do the biggest firms on the planet, like PIMCO, do? They don't trust the algorithm. They literally shut the machine off and hand the controls over to a human to navigate the chaos.
And here's why that is. See, an AI is brilliant at learning from the past. But humans, we're the ones who excel at understanding what's happening right now. We get the context, we can be creative, and we have that gut feeling to recognize when the entire game has changed and all that old data is suddenly useless.
This right here is the machine's Achilles heel. It can't think abstractly about a future that looks totally different from its training data. It's great at telling you what has happened, but it struggles to tell you why something is happening now, especially when the world decides to completely go off script. So, as you can imagine, this creates a kind of natural tension, a friction, between human traders and the very algorithms that are supposed to help them. And this isn't just a tech problem. It's a massive psychological hurdle we have to get over.
Yeah, this is a real thing. It's a well-documented psychological bias. For some reason, we have this deep, instinctive distrust of the black box. We don't know how it works, so we don't trust it. You see this a lot with retail investors. They'd much rather get advice from another person, even if all the data says the machine is actually more accurate.
Just think about it for a second. We're kind of programmed to forgive other people's mistakes, right? But when an algorithm messes up, bam, our trust is completely shattered. It's this deep-seated bias where we hold machines to this impossible standard of perfection. And that makes it really, really hard to fully embrace them. And what makes this even worse is this really dangerous idea that AI is some kind of set-and-forget solution, that you can just turn it on and walk away. Any trader who believes that myth is taking a massive risk. Because guess what? Markets change, strategies stop working, and no algorithm on Earth works perfectly forever without a human keeping an eye on it.
So, how do the smart traders get around this? Well, they don't just trust blindly. They verify. They do their homework. They use powerful backtesting platforms, something like LuxAlgo, to run simulations. They see exactly how a strategy would have done against years of real historical data. This lets them test, tweak, and really validate an AI's plan before they even think about risking a single dollar of real money.
And all of this brings us to the real solution, the new way of thinking.
A future where the goal isn't replacement, it's collaboration. The smartest people in this game aren't choosing sides. They're not picking man or machine. They're building a hybrid team.
The absolute top trading desks are already doing this. They're using a hybrid model, and they have a really clear division of labor. The AI handles all the grunt work, right? The repetitive, data-heavy stuff, scanning the markets, filtering opportunities, executing trades in a flash. That frees up the humans to focus on the big picture, the high-level strategy, deciding where to put the money, and jumping in when something weird happens.
And the results? They speak for themselves. I mean, they're really compelling. One study found that when you pair a human analyst with an AI, this man plus machine model, they avoided over 76% of the really bad forecast errors that humans or AI made when they were working alone. That's not a small improvement. That is an absolute game changer when it comes to managing risk.
Here's a great way to think about it. The AI becomes the best research assistant on the planet. I heard this great quote from an executive at Franklin Templeton. He said their AI plows through something like 40,000 research emails every single month. Imagine that. It lets the human expert completely tune out the noise and just focus their brain power on what really matters, making that final, critical call.
And listen, this isn't just an academic theory. This is the exact model used by the most successful quantitative fund in history, Jim Simons and his Medallion Fund at Renaissance Technologies. He didn't try to get rid of human intelligence. No, he combined cutting-edge machine learning with brilliant human scientific judgment. And the results? They were absolutely legendary.
So why does all this matter? Because the future of trading is not about picking a side in a fight. It's about being smart. It's about using AI for what it's best at, that inhuman speed and discipline, while keeping the human in the loop for what we're best at, context, creativity, and, being the one who's ultimately responsible. It really is the best of both worlds.
So the real takeaway here is pretty clear, isn't it? The whole man versus machine debate, it's over. The traders who are going to win in the next decade aren't the ones who fight AI, and they're not the ones who get replaced by it. The winners will be the collaborators. They'll be the ones who figure out how to master this incredible partnership. So the real question isn't who wins, it's how will you collaborate?